Hello guys, this is the Prince and you're watching Prince Media globally. Today we are glad to have one of the brightest students here in our studio by the name
Derek Wafula, who is a finalist at Daystar University School of Law.
So Derek is going to tell us more about Finance Bill 2025 which is proposed by the government. Derek, first we want you to explain to us what is Finance Bill.
A finance bill is a tool, is a document that enables the government to raise its own money through taxes. Yeah, because the only source of government to get money is through taxes. That's the main source. And then the same money is now used for infrastructure, building of roads, maintaining of roads, the drugs we have in hospital, funding of public institutions, payment of public servants. Yeah, that's the only way the government can raise money. So the finance bill is the document that allows the government to have a plan on how it's going to raise this money through taxes.
Okay.
Yeah.
So please can you reiterate what a finance bill is and why every Kenyans, not business people, should pay attention to the proposal?
Everyone should pay attention to it because in one way or the other, it's going to affect us. Because these taxes, as the government aims to raise them, they get it from each and every person. We either you pay for these taxes directly or indirectly. There are those people that are taxed. There are different types of taxes, value-added tax, there are different types. So everywhere you're being taxed, even buying bread. The moment there's a tax shift, everything changes. That's why you are able to see the price of bread rising this year, then next year it's going to be down. Everyone is affected by it. And then as a citizen, it's your duty to understand how this tax, or why you are being taxed, and how this tax affects you, and how is it important for you to be taxed in that way. So it's everybody's mandate to do that, to understand why.
Okay.
Yes, and this bill is put in place by the parliament, the legislative body. So it's its duty. Remember, under Article 2 of the Constitution, your democratic right, you always give it to your member of parliament after voting for them in. Now, these members of parliament have a duty to pass a bill after each financial year, and this bill is passed after assessing where the country is and what's needed to be done, or what is needed to be adjusted for the government to ensure that whatever they are taxing, whatever they are raising is in place to meet with the changes that are happening in the global market.
Yes.
Yeah.
On top of that, maybe I can still, on question 2, maybe I can still ask, what is the practical implication of this for employers and employees, reflecting to Section 5 of Income Tax Act?
So Section 5 of the Income Tax Act, literally this Section 5, it says that employers can reimburse employees up to 10,000 shillings per day for expenses incurred while on official duty away from their usual workplace without that amount being considered taxable income for the employees. So this is you see, when there's this thing called per diem. So this one is mostly goes for per diem people. This is an allowance that you're given if you are disrupted from your usual working place. Let's say you're being sent to another town to do some work. You are being interrupted from your usual workplace, so you need to be compensated for you to go and work. To enable you to go, you have to be compensated. Now, this Section 5 says that if the amount is going to be below 10,000 shillings, it will not be taxed.
Yes.
But if that per diem is above 10,000 per diem, now it's going to be taxed. Now, this is now, let's put it in practical.
Yes.
The people who get per diem that is less than 10,000 shillings, if you look at their income, is a bit, let's say, medium.
Yes.
So they enjoy that validity of not being taxed, not in the same scenario of a person who is earning per diem of more than 15,000 shillings. Per diem, that is per day, and that's the amount you're given per day if you go. So if you're earning less than 10,000, it's not going to be taxed under the new proposal.
Yes. Yeah. So it means the tax will be higher. Or what do you mean someone is not going to be taxed?
It's going to be for employees. The larger like it's going to be tax free if it's your per diem is less than 10,000. There are schedules for people per diems. It goes by your working class. So there's that person who has a per diem of 15,000. There's that person who has a per diem of less than 10,000. So it's aiming to protect those who have per diem of less than 10,000. So those people who have less than 10,000, they are not going to be taxed. Those above 10,000 now, they're the people going to be taxed.
All right.
So it's trying to protect the larger portion, because the larger portion enjoys per diem of less than 10,000.
Okay. This 2025 bill also proposed deleting several subsection 8 of the Income Tax Act, reflecting to tax expansion on pension and lump sum withdrawals. This sounds concerning. What could this mean for retirees and people planning for retirement?
So when you're looking at this section you've quoted section 8, I think, of the income tax. Literally, the bill now proposes deletion of section 4, 5, 6, 7, and 8. Because now, currently, the sections provide for specific tax-free threshold and conditions for pension incomes, for registered funds, and other retirement benefits. But then when we remove these detailed exemptions without immediately substituting them with new specifics, it will mean that we are trying to revise the framework for taxing retirement benefits. Now, you have asked about individuals who are nearing to retire. Now, individuals who are nearing to retire or planning for it, now should keenly watch on the subsequent regulations, because the bill is only proposing for the removal, but it's not justifying, it's not that direct. I think now there's a subsequent outcome. After the bill is passed, maybe they will have changes, because it only puts there that it needs to delete section 4, 5, 6, and 7, and 8, and 9A of the same, but it has not been given a clear way. So if you are nearing retirement, you should watch out and be keen, because in one way or the other it's going to affect them. When they reach that post-retirement income stage. But it has not given a proper way out. It has just said it proposes to delete section 4, 5, 6, and 7, and 9, which provide specific tax-free thresholds, but it has not provided a solution out of it and the reasons out of it. So maybe after the bill now becomes an act, we shall have a clear way forward, or subsequent regulations can bring out that. Because remember, this is a bill, it's not a final thing. It can be revised at any stage.
So the definition of royalty in the Income Tax Act, Section 2, is proposed to be amended specifically regarding software. How can you explain this change and its potential impact?
Now, this definition of royalty under the income tax, this literally touches on software developers and payments that are meant to it. Now, royalty, the definition is amended. Literally, it's not the whole word that has been amended. It has only been amended specifically in regards to the term software. Now, this change, it now explicitly includes the distribution of software where regular payments are made for the use of software through the distributor. Now, this one, it broadens the scope. If we look at the previous encounter, it covered development, training, maintenance, and support fees for the same. But now, this one now puts in place on if a company is providing software, and if it's receiving regular payments, like let's say subscription, these payments are now to be classified as royalties, and they will likely attract withholding fees. Yes.
Right.
Now this one will mainly impact to those people who are applying to software licenses and those people who are dealing with the software. Now it literally affects them, not everyone.
Okay.
Yeah.
The AI Gen Zs. Also,
No, software is for everyone. This company is providing software.
Not everyone knows how to use it.
And not everybody knows how to use it, and this thing, it will affect software developers mostly, rather than the consumers themselves.
Yeah. I understand. Another thing concerning the bill, we saw the introductions of the motor vehicles tax in 2024 Finance Act. Does the 2025 bill propose any modification or further clarification to this tax?
No, it doesn't.
Why? Or you are not?
It is not mentioned anywhere.
To tell.
No, I've not yet seen, but I've not seen anywhere where it proposes such.
Okay.
It doesn't give any clarification of the same, because 2.5% of the vehicle's value, with a minimum of 5,000 shillings and a maximum of 100,000, is always collected by insurers. It's still in force. The 2.5% is still in force. So it hasn't changed anything about the motor vehicle insurance stuff. It hasn't changed anything.
Yeah, but I saw somewhere it was talking about from the last was 2,000 Kenya shillings to 10,000 Kenya shillings, but we are heading there. The finance bill 2025 proposes shifting several items like locally assembled mobile phones, solar batteries, and electric buses from being zero rated for VAT to exempt. You mentioned this could lead to price increases. Can you please elaborate on why this happens and who bears the cost?
Now, previously it was zero rated.
Yes.
That is what was under the second schedule of the Value-Added Tax Act. Now, put in this scenario, when a seller charges 0% VAT to the consumer, but the same seller can come to claim refunds from KRA for the VAT they paid on their inputs, let's say the raw materials, because somebody is going to make a phone battery. Now he has to get the raw materials, because we are locally assembling them. He has to get the raw materials that are not available. He or she will still pay for the VAT. But now, because he has paid for the VAT, when he's coming to sell to you, they say there is no added VAT. Yeah. Now, KRA has that duty to compensate. Okay. It has to compensate to this seller. That's now the position that we are in. Now, if now we put it to exempted, this in the long run will keep the production cost lower. But when we move to the exempt category, now we are now shifting from the zero rated to now exempt category. The difference is the seller now cannot claim back the VAT they paid on their inputs. Now, if it was zero rated, a seller can claim the VAT the VAT he used to get the raw materials. But when it's exempted, now he cannot claim. So what happens? If he doesn't claim, he'll now come to the buyer to say, what? I've spent this, I'm not being compensated for the raw materials I got. In the long run, who is going to be hurt? The buyer. Because KRA now will be like,
it is like the
moment I put you exempt, you cannot come and claim, I refund the VAT. Now the seller will be forced to get the VAT and all the expenses now from the buyer. So this will make the electronics to be a bit expensive. Yes, they are locally made, but now they'll be a bit expensive. Now that is the situation, changing from zero rated to exempted.
Yeah. All right. The 2025 bill also introduces a new section 66A in the VAT Act regarding the inconsistent use of exempted or zero rated supplies. Can you give an example of how this might apply?
So this one, introduction of section 66A in the VAT Act regarding inconsistent use of exempt or zero rated supplies. I'll give an example. Company A is a registered manufacturer. Who imports raw materials from. Right? But he imports them VAT free. Okay. And then, because they are meant for producing, for example, let me say medicine, which are also exempt. This manufacturer then diverts these raw materials and uses them to produce cosmetic products, because the raw materials can be used for different purposes. Remember, the first intention was to produce medicine, let's say medicine, but then it changes the raw materials and start producing cosmetic products. Now, this bill, this section aims now to nab him. If you have gotten, you need to stay to your lane. If you said I'm importing raw materials, VAT free because it's medicine, you cannot use the same to shift to cosmetic products, which have another taxation, another plan for taxation. So it literally means that manufacturers will have to be consistent on their raw materials and their privileges they enjoy. They cannot shift to another. So it literally makes people to be accountable for what they're supposed to do. Because if you're given a VAT, you're not, the VAT is free or exempt for you because you're making drugs. You cannot use the same material to make cosmetic products. Yeah, those are two different things. Yes. So you need to stay to your lane. If it's drugs, it's drugs. The raw materials are imported to do drugs. You are being exempted by KRA to pay for the VAT. They stay to that lane. Now that's the good thing about Section 66.
Okay.
Yeah.
So it applies.
Yeah.
Okay. Yeah, talking about the minimum top-up tax under Section 12G of Income Tax Act. Can you remind us who this tax applies to and the significance of this deadline?
This minimum top-up tax, I think most people don't know about it. This was introduced by the bill in 2024, which targets large multinational groups. These are groups that have a turnover of more than 750 million euros or more. These are big companies that have, so it mainly affects these big companies that have a turnover of more than 750 million euros. But now, this one, the purpose is, it ensures that there is effective tax rate in the country, because Kenya falls below the 15%. So, when we pay the top-up tax to reach the minimum, by amendment of section, it was section, I think, 12G, right?
Yes. 12G.
Section 12G, it specifies that this tax is payable by the end of the 4th month after that end of that multinational financial year. At the end of that financial year ends in June. So the 4th month after June, that is July, November, October, December. It has to be paid by then. Yeah. So this ensures that KRA's revenue collection, there is a planning for the specific tax. It ensures there's enough time for planning for that tax, because these are large amounts. So it ensures that KRA has enough time to do the planning. That's the purpose of it.
Okay. Yeah. All right.
I know these questions are a bit...
They're very tough. Tough and challenging, right?
Yeah, but it's now, those are the nitty-gritties of the new Finance Bill 2025. We just need to look at it, the whole of it, and get to the bottom of it.
Yeah. Another thing I'm seeing, the Income Tax Act Section 15 on the allowable deductions sees several changes, including a limit on how long business losses can be carried forward and the removal of the CSS power to extend this. What are these specific changes in this act?
Okay, currently, business losses can generally be carried forward and offset against future profits. Yeah, that's what is being done in business. And so now this new bill proposes under subsection 15, that is subsection 4, it specifies that deficits, that is losses, shall be an allowable deduction for that year and the succeeding 5 years. Previously, the period was often interpreted as indefinite or up to 10 years, but now it has reduced to 5 years. The position hasn't changed, but now the period is what has been changed. Yeah.
Okay.
Literally now subsection 4 is only changing the time period from 10 years to 5 years.
5 years. All right. For employers processing the payroll, there is a new proposed subsection under Article 1A in the Section 37 of the Income Tax Act concerning payee. What must the employers now do about this?
Now, this new subsection mandates that an employer shall, before computing the payee deductibles from an employee's salary, grant the employee unapplicable deductions, reliefs, and exemptions provided under the income tax. Now, this one ensures that this position just ensures that employees enjoy what they're supposed to be given, all the deductible.
Okay.
Yeah.
Okay.
It doesn't mean like I've already paid you. I shall now come and start claiming it later. Let's say you're supposed to pay. The pay is supposed to be deducted at the first instance before I'm even giving you a salary, so that you don't come and complain about it later. So it's the duty for the employers now to make sure it is in place before the salary is released. They have to make sure the deductibles are already out.
So it's something legal.
Yes, for the employers who are not straightforward, it's a bit hard on them. But those who are straightforward, they realize that it's just trying to say this pay was supposed to be paid this time. I've already paid the pay for all my employees have been deducted this pay on time. They don't have to come up later starting issues. I was not deducted this amount was deducted, it was more than enough. It's just trying to arrest those issues that come afterwards.
Okay. Yeah, with this finance bill, you can also see good news for investors in the stock market. Can you explain the proposed exemption for gains of securities traded on the Nairobi Securities Exchange?
I think that question doesn't affect us per se, but it's more or less for those big companies that trade, the investors who are there in the stock market. And if you look at paragraph 74 in the first schedule of the Income Tax Act, the aim is to exempt gains on transfer of securities traded on any security exchange licensed by the CMA, Capital Markets Authority, from tax under Section 32F. So this means that if you buy and sell shares or other security listed and securities listed by the Nairobi Stock Exchange, any profit you make from that sale will not be subjected to Capital Gains Act. Yeah, that's what it means. To not be subjected to that. Yeah. This one is just more likely to encourage more activity and more investment in the local capital markets. Yeah. Because if you're not going to be taxed for capital gains tax, then it's free. We are now trying to increase the sharing of this and transferring of the shares and securities between.
Okay. The exercise duty schedule sees new or adjusted rates on items like imported glasses, certain plastic items, and even high-strength alcohol for manufacturers. What could be the reasoning and impacts of this?
Can I just be direct to the point?
Okay.
This one protects local manufacturers. Yes. There's nothing else.
Yeah.
Just
like that.
Yeah, it's just protecting local manufacturers.
Referring it to amendment to first schedule exercise.
Yes.
Okay.
Now I can see where we're going to.
Things are getting tough. Here we also see data privacy remains a hot topic. The Finance Act 2024 amended the Data Protection Act to allow KRA access to personal data. Could you remind our listeners of the specific circumstances under which KRA can access this data?
Okay, I think this is one of the main questions that we have in this Finance Bill 2025 about data privacy. We see that under Article 31 of the Constitution, everybody has a right to privacy. Yes, and you cannot infringe on somebody's privacy. Privacy, in other language, means the right to be left alone, not to meddle into your affairs or something. Yes. Now, there's this act of Data Privacy Act, which also gives it. But now, under Section 63 of the Finance Act 2024, amended Section 51 of the Data Privacy Act. Now, this amendment introduced a provision stating that the processing of personal data is exempt from the Data Protections Act general provisions if disclosure is necessary for the assessment, enforcement, or collection of any tax or duty under a written tax law. Now, this means that KRA is now empowered to access personal data held by various entities if it if it's necessary for them to carry out their mandate in assessing taxes, enforcing tax laws, and collecting outstanding taxes. Now, this means that KRA now can access M-Pesa.
Really?
Yes,
So,
that's now the outcome.
Talking of privacy, you means that Kenyans are not safe?
We can't say that Kenyans are not safe, but what has changed?
Our M-Pesa.
You know, we need now. This is another discussion about privacy and.
Privacy.
Remember, the first instance, privacy is the right to be left alone. Nobody should meddle into your affairs.
Okay.
And
so we can't talk about that.
Service providers are not supposed to share your details, your anything with a third party. But now, this section has been amended to state that if KRA wants to enforce, I'll repeat the section. If KRA wants to enforce, to carry out their mandate in assessing taxes, enforcing tax laws, this is like investigating evasions and to collect outstanding taxes, they can now access M-Pesa. Okay, it's a bad thing to some, it's a good thing for the government, but deep down we ask ourselves, what are the other outcomes if we open this door of KRA accessing every person's details, bank details, M-Pesa details? Because now a lot of transactions are on M-Pesa, but if we allow it to go that route, who is going to be safe?
I think you and me.
I'm not even safe because I'll give an example. This is now an out of question example. This is a husband who is investing away that even the wife does not know. But now KRA has a back end access to his transactions, M-Pesa bank transactions.
They know everything.
They know everything.
Yes.
This guy did not want it to be known. If they want the details, they just go to
the wife.
KRA and open it, and then you go back and you get everything you wanted.
Yeah,
is it now fair? Are we now bypassing the right to privacy? That's now the question we need to ask.
I can see the sense. The Tax Procedures Act is seeing an amendment where KRA must now provide reasons for an amended assessment. Why is this impact for taxpayers? And a new subsection 31 of Tax Procedures Act.
This one is a new subsection. That is section 31, subsection 8A.
Yeah.
KRA issues an amended tax assessment, which usually means that we believe more tax is due. Now, this one says they will not be required to include in the notification the reasons for that amendment. This one is just, let me say this, it's crucial for us taxpayers more than the KRA itself, because it will now help us understand the KRA's position, identify the specific areas of disagreement, and prepare a more informed objection to choose.
So viewers, have been your host Aseka the Prince, and you've been watching Prince Media Globally. Today tumebarikiwa na mgeni kwa studio, not other than Derek from Daystar University, student of law. He has been taking us through what finance bill entails. Yeah. What can you tell the viewers about that in conclusion?
I think it's our duty as citizens to get more familiar with it. Me explaining here about the proposed bill is not enough. You need to get down, get the whole document, read about it, how it's going to affect you, be it an entity, be it a company, be it an individual. Read about it early enough, so that when this bill comes to pass or is taken to Parliament, let us not start hearing from rumors and act upon it like what happened in the last finance bill. Right. So let's get familiar early enough, we still have time, and also look at those changes that come. For example, that section that clearly touches on data privacy. When KRA is now given an upper hand to access your data, what happens? I think that is now makes everyone's business to read about it, because in one way or the other, as common citizens, we're being affected by the same thing. So we need to get familiar more and be accountable for our own actions. Remember, your right cannot be denied from you. Your right, you only access it by you making it familiar by the laws and making it your own reserve to make sure that nobody goes against your right. Yes, so make yourself familiar with the finance bill, look at its help, look at its good things, look at its bad things, and get familiar and look for best way to address those issues. Thank you, and have a blessed evening.
Alright, and that marks a story for another day. Don't forget to subscribe to my YouTube channel, Prince Media Globally. Like, share, and comment. Bye bye.